I can see you.
All right, good. All right, so I've got your background, I've got your bio and all that good stuff. A lot of things that we can hit on. Is there anything in particular that you want to make sure that I cover or anything that you want me to stay away from?
Doesn't matter to me.
No? You good to go with everything?
Yeah,
Okay, easy enough. All right, if you're cool with it, then I'll just jump right into it.
great.
All right, cool. Welcome everybody to the Real Estate Mogul Podcast. I'm your host, Tom Cafarella, and I am super excited to bring my guest on today, Michael Young. Michael, what's going on today? Anything good?
Everything's good.
Everything's good. That's awesome. All right, so why don't you tell us a little bit about your background, how you got into real estate and all that good stuff?
I've been in real estate since 1990. Before that, I was developing mobile home parks and apartment buildings with my family. Yeah, doing it for a long time.
So what got you interested in it in 1990?
Well, I'd worked with my family for a while in development, and my dad got sick. So at the time, I thought, if I'm going to do something on my own, I love real estate. I want to keep doing that. So I might as well get my broker's license and then go from there and have, as much autonomy as I can. So that's why I did it.
Now, did you start out initially working for yourself or did you work for somebody else in the beginning?
Yeah, no, the first 2 or 3 years I worked with Coldwell Banker and other couple different companies who were great, but I always knew that I was going to be working on my own because I wanted to have my own family office and slash real estate brokerage office to do both acquisition and brokerage. That was always the plan.
So, how long were you with kind of those big box companies before you ended up going on your own?
About 3 years.
Okay. And then you got your broker's license, you opened your own place, and then how did it kind of go from there?
I chose a mentor. I started working with Mike very, very heavily, and
Yep.
I wanted to learn skills and very aggressive. And Mike still coaches me today.
So you have been coaching with Mike for what now? Over 20
28
years?
years. Yeah.
Oh my God. Wow, that's crazy. So now I don't know when he started his coaching business, but were you actually coached by him directly at that point?
Well, he didn't actually have a coaching business back then. Back then, he was speaking and doing seminars. But I got very familiar with him very quickly. So we became. I don't want to use the word friends because that's being a little too forward. But um, I would see Mike probably 20 to 30 times a year, and we became friends. And I would call him. I would email him. He was always very, very open to me, and to this day, more so than ever.
So is he in your market?
Mike? No, Mike's from Southern California. I'm from the Bay Area.
Okay, perfect. So you said you saw him 20 to 30 times a year. Like, did you
Well,
have coach?
he would come to the Bay Area to speak. Now, this is again 28 years ago when he was in his early to mid 40s. So he was all over the country all the time. So I had great advantage seeing him because he was speaking all the time. So I would go to the Superstar Retreat. I would go to other things he was doing, but he would come to the Bay Area.
Okay. And so at that point, there was no coaching business. And so when did you officially start coaching with him?
That was in the mid 90s, mid to
Okay.
late.
Perfect. So you started coaching with him, been working with him for over 20 years. How did your business kind of go from there? Like, were you hiring agents at that point? Were you a solo person, or were you doing investment deals at that point?
Well, I've always been investing in real estate, but I used real estate as a means to an end for acquisition. So, brokerage has always been where I would pay personal expenses, pay my taxes. What was left over would go into the bank for not, I don't want to call it savings because you don't really save money, or like storing money. And then when I would get a certain amount, I would put that into real estate investments.
Okay. And when you say investing, are you talking about all
Multifamily.
all multifamily and all locally where you're at, or in
Bay
different
Area.
parts? Bay
Bay
Area.
Area.
Okay.
Yeah.
So going back then, I mean, right now the market's absolutely crazy there. Back then, could you buy properties and actually cash flow?
I don't buy properties that don't cash flow.
Okay. Can you tell us a little bit about the numbers back when you were first buying? Like what type of properties you were purchasing, what the cash flow looked like, and all that good stuff?
Well, I've always been an add value investor. Do you know what I mean when I say that?
Um, I can infer what you mean, but why don't you explain it just so that in case any of the listeners don't understand?
Sure. So I buy properties the way some guys on Wall Street buy stock. I'm looking for properties that are add value, meaning that they're properties that need work, or they're being mismanaged, or there's something going on that's wrong. So I go in, I fix them up, and I increase the cash flow. I never sell.
Oh, wait, so you end up you don't hold on to them for the long haul?
Yeah, I never sell.
Oh, you never sell. Oh, sorry. I thought you said then you do sell. So
I'm not a flipper.
so were you buying, was it like 2 families, 3 families, 4 families? What type of properties were you actually investing in?
Well, initially it was small properties, but now I usually buy anywhere from 50 to 200 units.
Okay. So I know a lot of the people that are listening right now probably want to know how you kind of bridge the gap between those two, because obviously somebody's first starting, 200 units sounds like a lot. How did you kind of work your way up to doing bigger deals like that?
Well, actually, in retrospect, I would have done it differently. I would have started out doing minimum 20 deals, because you really, if you're going to do 4 to 10, 15, 20, those are really not good, because they're too management. I don't like to manage. I don't manage properties. So you don't want to be managing the properties. You want to find properties that need work, where you can add value, jack the rents, and then have a manager take care of them for you. Then once you've added the value, you increase the equity, take out your original down payment, and then have that go into another property, while that property that you bought is still cash flowing very well, and you've got equity in there that you didn't have before, so it becomes an infinite return. What I just told you, probably 3% of the population even understands what I just said. But if you can actually, which is very simple, if you actually understand what I just said, that's one of the keys to building wealth in real estate.
Yeah, and it's something that we've done pretty much from day one. I mean, they call that the BRRRR strategy. So, you're buying, you're renovating, you're renting at fair market value, you're refinancing back out, and then you're repeating.
But you're refinancing back. The difference is some people, when they refinance back out, they're breaking even.
Yep.
Refinance back out, I'm getting my money back, and a 20%, well, not even 20% return, is an infinite return, because now I've got no money into it and it's still cash flowing beautifully. And even if the market crashes 20 or 30%, it's still going to cash flow. That's the key. You and I have seen, I don't know how long you've been doing it, but I've seen a lot of geniuses that did that, and then after the market tanks, they go bust. You have to be able to withstand market crashes. You have to be able to withstand market downturns. That's the difference.
So what advice can you give us in terms of that? Like what are some of the mistakes that people make when that happens?
They don't have enough equity in the property. They get too big for their britches. They don't have, one of the big mistakes I see people make is they don't have capital reserves. They don't keep enough capital to either buy properties, to fix properties, and or when there's market turn downs, to buy more properties. Because you really make your money. You can make money I make money in all markets, but where you're really going to get the fattest is when there's blood in the streets, when there's recessions, downturns. That's really when you're going to make your biggest bangs in profit. I mean, the last 5 years, I keep buying property, but from 2008 to 2011, that's when I was buying properties 15, 20, 30 cents on the dollar.
Even in the Bay Area, you were getting them at discounted?
Yeah, absolutely.
So given that where we're at in the market cycle right now, I'm assuming that you're probably in agreement with me that we're towards the top end, right?
I thought that 2 or 3 years ago. I have no idea where we are. I just know it's deal to deal.
Right, meaning that you get a good deal placed in front of you, you buy it, you're saying, right? No matter what time period we're at. So in terms of getting prepared for the market to change, like how far away do you think we potentially are though? Do you think
I have no idea. I'm not trying to be cute. I really don't know, because we're in a different world right now. We should have crashed in the last 2 or 3 years. Mm-hmm. We have more debt than ever. People have less money than ever. Wages aren't going up. inflation has been going through the roof actually for years, but I think the government manipulates CPI ratios, so I can't rely on that. I know that even during the downturn, I can keep increasing my rents and it never stops. So when you say where are we, I have no idea, because we're living in a kind of a fake economic universe. All I know is if I see a deal that makes sense, I buy it. What's happening in Congress, what's happening in the world, I have no idea. If you see a great deal, and even if you know there's going to be a downturn, the litmus test is, this is really the way to answer your question. It doesn't actually matter what's going on in the world, because we have no control over it. I have no idea what's going to happen. If you find a property that makes sense, that even if the market goes down 20 to 30%, and you're still going to cash flow, that's all that matters. Because then you're able to get through downturns as well. If you buy a property and you're on the edge, you're going to go bust, because one of these days there is going to be a downturn and you're going to be upside down on that property.
So you've talked about, buying properties no matter what time period it is, if the numbers make sense. So many people are having difficulty finding great deals in this market. What are your acquisition strategies that are working for you today in order to get these great deals?
You have to look outside of where you normally look. You may have to get on a plane. You're going to have to look at more deals. You're going to have to make very good. You're going to have to make good contacts with brokers in every market. Every market, there's only 2 or 3 brokers that actually control those deals, and most of them are going to be off market. They're not going to be on LoopNet. They're not going to be on. The average realtor is not going to have them. So you really have to be out there on the ground, or have people on the ground, and/or be calling and looking directly, maybe even to sellers or principals, because you're going to find them on, mostly, you're probably not going to find them on LoopNet. You're probably not going to find them on just any person.
Yeah, I think the biggest mistake that new people make is they're trying to bid on properties that everybody else knows about. And
No,
you just can't.
I don't do that.
Yeah,
I don't get in bidding wars.
Right. So what are some strategies besides, networking with people, or what are some strategies in order to network and work your way in with those particular 2 or 3 people?
You have to call brokers. You have to tell them, if you just call brokers and say, give me a deal, you're never going to get call back. You're never going to get to first base. You've got to be able to tell them, what your track record is, when you're looking to place, how many units you control. Be specific. If you're not specific, because they got people calling them night and day, because everybody's got cash. Everybody thinks they have cash.
Mm-hmm.
Everybody's got a big story. But very few people have the cash and the track record and the wherewithal to do the deals and know how to manage properties to make it worth a broker's while to call them back and or deal with them.
So you talked about in the beginning stages, you bought smaller buildings, smaller apartments, and now you said starting out you would go bigger.
Yes, definitely, without a question.
So for somebody who's never done a deal or maybe only owns a couple of multifamily properties, how do you go from that space, a 2-family, a 3-family, in order to the bigger commercial buildings?
You have to do one of 2 things. You either have to partner up with somebody, and or you have to store more money to buy bigger properties. Because if you're just buying 2 to 4 unit buildings, you're either going to go bust, or you're not really going to get anywhere, because it's just a losing proposition. It takes too much time. You're missing opportunities. It's just, I don't know. I don't know anybody that got really wealthy buying, sticking with 2 to 4 unit buildings. I mean, yeah, I know guys that have done it for 30 or 40 years, and it took them a long time to do it, and they manage the properties themselves. But that's just not a formula. I think that the best guys I know, they buy minimum 20, 50, 100 unit buildings. They don't mess around with 2 to 4 unit buildings. Now, if you want to flip into larger properties, if you have 2 to 4 units, you want to flip into a 10 unit or 20 unit building, that's fine. But just to keep buying duplexes and fourplexes, that's not a winning formula to me.
Now, you talked about the fact that the bigger units allow you to have better management in place. It's easier to manage in one individual area. Do you find on average the deals also tend to be better?
Sometimes, yeah. Well, there's less people bidding on them necessarily. I mean, they're the ones that are bidding on them usually sharp people, but you're trying to scale out. You don't want to have 10 roofs if you can have one, right? You don't want to have 10 foundations, 10 roofs if you can have one. You also want to be able to buy a lot in a certain area. So you, again, with your management, you can scale. It makes sense. Yeah, so I just overall, if you can do that, it's better to do that.
And
You know,
do you own the property management company who manages your stuff, or is it a totally separate entity?
no separate entity.
Okay.
I don't want to be in the management business.
Okay. And that's because of the margins of it, or you just don't enjoy it, or?
I have no interest in that. My best returns are going to be on finding hard assets that offer me the income and the tax advantage and appreciation and the. I already have a real estate brokerage business. That's enough of a retail business for me.
So in terms of financing them, for people that are kind of fairly newer, are you raising capital? What type of financing is typical for the type of deals that you do?
Well, initially, and again, this may be different than some people. Initially, it's going to be probably hard money or private money because the properties I'm buying, they need work. They're distressed properties. They need to be fixed up. So I'm going to go to private money initially to fix them up. Then I'm going to cash them out after a year or 2 years after they're fixed up, after the rents are jacked up, and then I'll put permanent financing on it with a regular bank.
And what percentage of a discount off of retail do you typically have to get for you to be interested in the deal like today?
It's not really a discount off of retail. It's really about what's the opportunity. I'll pay you full price if you're too lazy to raise your rents 30 to 50%. I'll pay you your price if it makes sense. I don't need to squeeze every nickel out. If it's a good deal, it's a good deal. I'm not gonna not do a deal over $50,000 or $100,000 when I have the chance to get a 25% return on my equity or eventually infinite return over a $50,000, $100,000 difference. That's stupid.
So what are the numbers that you are looking for when you are buying a deal? I know you said cash flow, but in relative terms, is there, a cap rate, or is there anything that you're specifically looking for in any of these deals?
I never look at cap rates because I'm looking at add value properties. So cap rates are irrelevant. What I'm looking for is a 20 to 25% return on my equity. That's what I'm looking for. I want those rents to be below market. I can go in, fix up the property, increase the rents dramatically so I can get the return I want, and then get my equity out and then do it again somewhere else. It's very simple formula. Not easy, but it's very simple.
So you mentioned a few times buying properties with below fair market value rents. Why are these buildings typically under rented?
Oh, it's always the same 3 or 4 reasons. Either the people that own the buildings either don't know what they're doing, didn't realize what they were getting into, or they're old, or they have drug or alcohol problems, or they're getting divorced, or somebody died. It's always going to be one of those deals.
So besides real estate agents that that you're connected with in your local market, are there any other main sources for you to acquire deals like this?
Not really. No, it's usually going to be coming from agents.
Mm. And so you talked about, and you've had the brokerage side of the business since the early 90s, you said. How has that kind of grown throughout the course of the year, and what does that look like for you today?
How do you mean?
Well, you obviously started off just you. Did you build it out into like a bigger brokerage, or has the brokerage just kind of operated as kind of a solo independent place for you to do your investment deals?
Yeah, so it's more like it's like a brokerage / family office. So the brokerage, part of the brokerage acts as a family office where I have people in my office looking for deals from me every day. And so, the brokerage business is a separate entity, but an offshoot of that is looking and processing and doing deals for acquisition.
Mm. A lot of people talk about, a lot of investors say, well, should I get my real estate licensing? Some people argue that it's not in the best interest of an investor to get licensed. What's your take on that?
I don't think you need a license. When I'm going to approach a broker, I always let them represent me. never represent myself. And further, I'll even tell the broker, if you want to keep a piece for yourself, not take a commission, you can be a small partner in the deal, all the better. I have no problem with that. So they don't need to get a license. I have a broker's because my retail business is retail brokerage. It's not to buy property. In fact, I think you're actually damaging yourself by trying to represent yourself. To try to save 30 or 40,000 bucks is stupid. Really, really colossally dumb. When you can get somebody else to represent you, have a relationship with you, have them start giving you off-market deals, have them fight for you to get that deal, it's not worth the 30 or 40 or 60,000 when you're going to make it up in the long term. If you keep that property forever, that's nothing. That's a blip. That's peanuts. You've got to see the big picture. The big picture. You're not gonna get wealthy saving commissions. That's really small thinking.
Do you have a particular goal in terms of how many units you want to get up to within a period of time?
Yeah, so I want to get up to, right now I'm at 350. I want to get to 1,000 in the next 5 years. I want to get to 3,000 in the next 10 years.
Okay. And what is the plan in order to do that, to step that up and, double and ultimately 10 times what you have today?
It's going to be a combination of refinancing, 1031ing, and just keep doing what I'm doing with my brokerage business. A combination of those three things.
So you talked about...
It's a classic formula. It's nothing that hasn't been done differently in the last 100 years. This is how, whether you're Trump or the Kushners or anybody else, this is what they all did. Every single one of them did the same thing.
So you talked about it being a major mistake not to use debt right now. What do you mean by that?
Money is free. If you're not using debt, again, you're thinking way too small. If you're not using debt, you probably shouldn't even be in real estate. If you're not smart enough to use debt, then you're really not the brightest bulb.
So what would you say to
I'm sorry?
What would you say to the Dave Ramsey types that all debt is bad?
I think Dave Ramsey should talk to any company, Coca-Cola, any huge large company, talk to any huge large real estate developers that's all use debt. Dave Ramsey has an audience of people that should not be investing in real estate. Anybody that tells him to, own your truck for 15 years, and he's talking to people that their biggest goals in life is to have maybe $3 to $5 million, and that's fine, that's great. But I'm talking to people that want to be worth 30, 50, 100, 200, 500 million dollars, not 3 to 5 million. If you want to be worth $3 to $5 million, you probably shouldn't even be watching the show. You can do that pretty easily. I'm not the right guy to be talking to.
Right.
I want to have $3 to $5 million a year in passive income, not net worth.
Right.
So we're talking. I don't even know how to relate to those people. Nice people. I don't even know how to relate to those people. Those people. If you're living in the Bay Area and you're worth $3 to $5 million, you're broke. You should really consider moving to Texas or Oklahoma or Apple Valley, California. You should not be living in the Bay Area. If that's because the typical person has their house in the Bay Area. Maybe it's worth $2-3 million bucks, and they have a little stock portfolio and they have some cash. They think they're doing great. They're not great. They're broke. All it's going to take is one devastating illness, something that will wipe them out. So again, you're probably talking to the wrong guy.
You also talked about the power of learning from the best. How does that relate into what you've done over the course of your career?
You're going to learn. You got to learn from people that have done what you want to do. So you want them to mentor you. If they can't mentor you, read their books, meet them, suck their brains out. Just do whatever you can to replicate and model what they've done. It's easier now than ever. There's so much information. In fact, there's probably too much information. But find the person that you want to replicate, and then just do what they did or are doing.
And so besides Mike Ferry, Mike Ferry obviously has, a tremendous real estate coaching business, and I'm sure you learned a lot about the retail side of the business from him. Who is kind of your mentor on the investment side?
I've always watched the biggest of the big guys on the East Coast and the West Coast and see what they do. It's a very simple formula. They store money. They don't save money. They use money as a tool to buy hard assets that create passive income to the end to then create more passive, to buy more hard assets to create more passive income. So you have to first decide what is it you want to have, what is it you want to do, what is your goal for passive income? You want to have passive income. See, I have passive income goals. If you want to be a flipper, then everything I've just said, if you want to be a flipper, then everything I've just said goes right out the window. It makes no sense whatsoever. If you want small net worth, everything I've said goes right out the window, makes no sense whatsoever. But if you want to have an 8, 9, 10 figure net worth, then this is, from what I've seen over the last 100 years, watching the best of the best on the East Coast and the West Coast, this is the formula every single person, to the man and woman, have used. Anybody can do it. It doesn't take a college degree. It doesn't take a real estate license, but it does take guts, vision, and determination, and sleepless nights, and a very strong stomach.
So you talked about having a strong stomach. What are some of the issues that you've run all across that have been tough to deal with?
You've got to deal with flaky people all the time. People do not keep their word, flaky people. You have to deal with the ups and downs of markets. You have to take risk. You have to take calculated risk. You're not going to throw darts at the board, but you are taking calculated risk. You have to be able to be okay with that. You have to have people changing terms. You have to have banks changing terms. You have to have sellers changing terms. You have to have people lying to you. You have to have brokers that are totally incompetent, don't know what they're going to have to do the broker's job for them half the time. These are things you have to understand and deal with. You have to deal with contractors that are even flakier than realtors, which is hard to believe. They are. It's just part of it. But you have to, here's what the bottom line is. Be comfortable with being uncomfortable. And if you can't learn to be comfortable with being uncomfortable, again, you probably should not be doing this. Because this requires a high level of being comfortable with being uncomfortable.
You talked about adding value to all the properties that you buy. Do you have your own construction crews? Do you have GCs? How do you get that work done on those bigger projects?
I have a skeleton crew that goes from, sometimes depending on where it is, you have to use local crews. You have to find the best people you can. It can be challenging sometimes. And
you said all your stuff is in the Bay Area, right? You said nothing ever done.
Right now it is, but like, for example, I'm going to Mike Ferry Superstar Retreat next week. So it's in Las Vegas. So as soon as I get off the plane, I'm looking at a 107 unit building in Las Vegas. Looking in Nevada, I'm going to start looking in other places, because if things change politically, which they might in California, they might change some laws. That's going to have a negative effect on rental property landlords in California. So you have to be cognizant of that.
Yeah, I think both your state and mine, they're so super tenant friendly. And, I've thought about, all of my stuff is in Massachusetts as well. And I've thought about, maybe doing some stuff outside of Massachusetts too, only because of the laws just so heavily favor the tenants. Yeah,
it is what it is, and it's probably not going to change. So, you have to kind of just roll with it and do the best you can. You're in East Coast?
I'm in Boston. I'm in Massachusetts. So.
Oh, that's like San Francisco. They're communists on both sides.
Yeah, it's tough. On the one hand, it is really tough. On the other hand, the benefit that I think people have that are slightly bigger investors and have a little bit deeper pockets is that it knocks a lot of the smaller people out of the game. So a lot of people can't withstand a tenant not paying them for 6 months or 12 months. So in some ways, it kind of helps the people that have deeper pockets because a lot of the other smaller people can't even get into the game. But
Tom, you bring up a really good point. I should have mentioned this in the beginning. That's maybe the biggest reason why you don't want to buy 2 to 4 units, because see, if I have a 20, 40, 60, 100, 200 unit building, somebody doesn't pay their rent, even if 3 people don't pay their rent, I'm still going to cash flow beautifully. But if you have a 2 to 4 unit building and 1 or 2 people don't pay their rent or they leave, you're screwed. See, that, amongst the other things I said, is a huge reason why you want to scale. You want to get larger buildings. So if you have a 20 unit building, 2 people leave, you're still doing great. You'll fill it up, you're fine. But you have 2 units and 1 person leaves, or you build even 6 or 8 units, 1, 2 people leaves, that can have a major effect on your cash flow. I don't ever want to have tenants have that kind of control.
I know you mentioned that you want to buy over 20 units. Is there any sweet spot there? Like, are you looking, if you had to say, what is the ideal property for me? Is it a 50 unit, 100 unit, 150 unit, or is it just all about the deal?
It's all about the deal. It's always all about the deal. I mean, I'll buy, if I have to, I'll buy a 20 unit building. I mean, I bought a 22 unit property a year and a half ago. It was an insanely great deal. I mean, and I still have it. It's great. Got all my money out. Cash flows pays me 25%. If I kept my money, it would be 25% on equity. But now I still get every month, I don't know, 5,000-6,000 bucks a month, and I have no money in it. And I've got $2 million of equity in there that with no money in it. So I mean, I'll take that all day long. A 22 unit building.
Yeah. Have you ever had any issues where you bought it, you renovated, you went to go refinance it out, and you had issues getting your money back out of the deal?
No, not so far. I mean, that's why you really have to make sure that you really know what you're doing and what you're buying. So
Right.
you go for the permanent financing, you don't have a problem. And that's always a risk. I mean, just because it happened doesn't mean it couldn't happen. But that's again part of those sleepless nights, part of having a strong stomach to be able to deal with that if it does come up, or just the possibility. Some people, just the possibility of it happening, can't deal with it.
Yep.
And you know that.
For sure. So you've got
everything I'm saying doesn't require. I didn't go to college. This is not none of what I'm doing requires a college degree, a degree in finance or economics. Do this, but it does require a certain mindset and a certain skill set.
Yeah, I think the mindset is the biggest thing. I mean, like you said, it's not an educational thing at all. I mean, you have to learn about it, about getting these type of deals done. But at the same time, you certainly don't have to have any advanced degree in order to do it.
Absolutely.
So, what's the one piece of advice that you would give to somebody who's just starting out on day one?
For what?
Getting into investing. They just read a book. They just went to their first seminar, and they want to get into the game. What would you recommend that they do?
Well, first of all, reading books is not going to get you anywhere. So don't worry about books. Go out and start looking at properties.
Yep.
Learning about your local market. Find in your local market, who are the biggest landlords? Who's the guy or gal that owns 50, 100, 500, 1,000, 5,000 units? Go interview them. Ask them to work for them. I mean, if you're really serious, work for them for free for 6 months, just to hang around them, see how they put deals together, sign a non-disclosure thing so that if they find a deal, you can't rip off their deal. Do whatever it takes to model them, see how they think, see how they act, see how they react, see how they put deals together. Start looking at every property you can, 20, 50, 100 units. Start looking who are the top 1 or 2 brokers in the area that control that market, because every regional market, there's 1 or 2 or 3 agents that control that regional market. And most of that stuff is private. They have their top 2 or 3 or 5 investors. They don't even put it on LoopNet. They call Bob or Mary and they say, hey, listen, there's a deal coming up. Here's the return. What do you want to do? Those are the kind of things you have to start jumping into. And start accumulating cash. You're going to need a lot of cash. Start storing it away, getting it ready.
So how can our listeners, if they want to learn more about you or reach out to you, what's the best way for them to get more information on you?
They can call me 415-215-3925, 415-215-3925 is my cell number. You can email me, or you can text me, obviously. You can email me at Michael at my company's name is Princeton, like college, Pacific, like the ocean properties. Michael at Princeton Pacific is my email, Michael at MICHAEL at PrincetonPacific.com. But my company is Princeton Pacific Properties.
Awesome. Well, I want to thank you for dropping so much information to all the people who are listening. It was a great show, and thank you for coming on.
Always a pleasure.
Thank you. And this is Tom Cafarella from the Real Estate Mogul Podcast. I will see you guys all again in the next couple of weeks. Thank you.
Thanks, Tom.
That was good. Thank you very much. I appreciate it.
My pleasure.
Getting me to step up my game. I got to start getting out all those properties you're talking about. Those are all the ones I own, those 2 to 6 unit deals.
Well, what are your thoughts?
Oh, honestly, I just never get the other properties put in front of me.
Yeah,
I've
yeah,
always all the deals I get, they're off market, but they're stuff that I personally market to. I do mailers, I do cold calling,
right.
all that stuff, and I just, I've never gone after
See,
big.
Tom, you can take the skill sets that you just talked about. You could take that same skill set, and then start applying it to the larger properties because you already got the tough stuff down. If you already are doing that stuff, you're calling and you're mailing all that stuff. You're working hard doing it. Now, just take that same skill set and put it in larger properties.
I know. I think I've always been a little bit intimidated only because I feel like the people who own those buildings are less likely to be under any sort of distress for any reason.
It's funny. I used to think that too, but then you realize they're just people like all of us are, and a lot of these people are older. I'm in my mid 50s, but a lot of these people are in their 60s, 70s, 80s. They've owned them for a long time, and they're just tired. They don't want to deal with it anymore.
Yeah.
Maybe, or they have different. Maybe they have cancer. Maybe they're getting divorced, or maybe they want to cash out and give it to the kids, or maybe their kids are deadbeats and they feel like, well, my kids don't want it, so I'll just sell it and go move to an island. I mean, 1,000 reasons, but how old are you?
36,
How many units do you own now currently?
300.
You own three. I mean, good for you. And those are all 2, 4, 6 unit buildings.
Yeah, my biggest one is 11
Wow.
units.
How do you manage them?
I have a property manager. He just manages them. I don't know.
Man, honestly, one man's opinion, you should flip all those into like 1,000 units.
Yeah.
It'll take you 2, 3 years, but start flipping them into 20, 50 buildings. You've got are most of them pretty? Are they heavy equity, or you have a lot of debt?
I've pulled out most of the money on all of them purposely
Yeah,
to continue to buy more units, and some of them have equity and some of them don't.
yeah. The ones that don't have them, get rid of them, because once the downturn happens, you're gonna.
Yeah.
I'd rather see you sell them now. If you have to pay capital gains, pay the capital gains, or if you don't, you don't. But get your cash, because when the downturn does come, and none of us really know when that's going to be, you have the cash, man, you're going to get fatter than you've ever gotten.
Yeah.
Yeah, get rid of the losers. If they're not cash flowing beautifully, or if it's going to take one downturn and 20% you're going to be negative, get rid of them now, man.
Yeah.
Because this is probably as good as it's going to get.
Right. I know. That's the thing.
I don't know for sure. I was honest when I said I don't know what's going to happen, but if I was a betting man, if I had to bet, another year or two, Trump or no Trump,
Yeah.
I don't know, man. What do you think?
I what you said is what I thought, which is that I thought we'd already be done by now.
Yeah,
I'm surprised it's lasted as long as it has. And
cheap. 2 words: cheap money.
yeah. I know you're right.
And Trump, people are confident. Whether you love him or hate him, he's all about business, so people are confident about that. So that helps. But all it's going to take is one weird black swan to jump out to fuck everything up.
Yeah, I know you're right. Oh man.
Yeah.
All right. Well, I will have my guy send this over to you, and however you want to use it, or if you ever need anything from me at any point, let me know.
Yeah, and vice versa. Stay in touch. If I can ever help you in any way, um, please stay in touch. In fact, what's the best number to reach you?
My cell is 781
781.
486
Uh-huh.
3000.
Why don't we talk on some of it, just kind of compare notes?
Sounds definitely open to that for sure.
Yeah, I mean, there's not a lot of young guys like yourself that I mean, kudos to you. You've done an incredible job.
I'm
And
trying. I mean, I work.
well, no. Look, it looks like you're calling out of a dorm room. I didn't know you owned 300 units, for God's sakes.
Yeah, this is my office. I've got 6,000 square feet here.
No, right. But you look like you're 20 years old and working out of a dorm room. If I'd known you were, a seasoned investor, it wouldn't have changed my answers. But there's very few guys that are in the mid-30s that own 300 units. So you did an incredible job.
Yeah, like I said, I mean, it's I started.
But I will warn you.
Yeah.
I will warn you. I'm telling you. You're obviously a very smart guy. If you don't get rid of the losers now, you could lose it all.
Yeah.
I've seen guys just like you, smart, brilliant. In the good times, they massive portfolios just to lose it all. Because I've been through many recessions. I'm 55. They lost it all with one bad market. They got wiped out. So I don't want to see you get hurt like that. So I'm telling you, if you can, start getting rid of those losers as fast as you can. Better to have, it's better. I'd rather see you have 100 units that are solid, cash flowing. You know, even if the market goes down 30%, you're still going to do beautiful. Much better than having 300 or whatever it is that, you know, half of them are iffy.
Yeah, yeah.
But you already know all this.
Not really. Nobody knows everything, right?
That's true.
Yeah.
Anyway, thanks for the opportunity. It was fun.
All right. Thank you. I appreciate it.
Okay, guy, take care.
All right. Bye.